ReaLAWstate with Patti and Kate. Woo, woo! Yes, I thought I would just dress for the occasion of
You
talking
are
about
right.
taxes. And yes, just to keep you guys
You're
awake
like
during
Uncle
this.
Sam, I'm over here, I'm over here.
Yes, tax me.
Oh man, it is the final week of taxes and the deadline.
So
Uncle
they
Sam.
say.
Yeah, it's scary. It's funny. I was listening to this talk radio station as I was driving to the Secretary of State's office today. Super fun. And anyway, so
I still want to go down a rabbit hole and find out what she was doing there, but I won't. Go ahead, keep going.
All right. So I was listening to this woman, and she writes for the Globe, and she writes in the financial section. So they were talking to her about taxes. I said, well, how perfect, because we're going to be talking about
this
taxes.
This is my homework.
Yes. And so one of the things that she said that she's been trying to get the word out, so I thought I would help it along, is...
You're such a good girl. Such a good girl.
So
Go to
I
Secretary of State, giving out the good words. Go ahead.
If you file online, like at the, I think the IRS on their website, they have certain free ones that you can use, you can e-file. So they're going to ask you to verify yourself. And one of the ways you do that is by entering your adjusted gross income from the year before. So you would take your 2020 tax returns, find the adjusted gross income that you entered, and you put that in, and that helps verify who you are. However, there's been a major problem because the IRS is egregiously behind. So if you put in, I like easy numbers. I made $10,000 last year. It's going to go because your return hasn't been filed or hasn't been processed yet by the IRS.
Oh my gosh.
And in fact, there are 7.5 million returns that haven't been done from prior years. That's how far behind they are.
So that's all of the United States?
No, that's not all the United States.
No, so 7.5 million in mass?
No,
all
of
yeah.
I thought you meant that was everybody, but it was like, no, there's more people than 7.5
No, those are just the ones that have their files.
Yes.
Their taxes filed.
So
that's incredible.
But there's a workaround this woman was trying to let everybody know. So if that happens to you, you put in your AGI and it says, nope, not going to work, put in 0. And she said that will get you by that step.
Well, for realtors, that might be it.
Yeah.
By the time it's adjusted.
By the time it's
Because that's
adjusted.
why we're talking about taxes.
Yeah.
How do we adjust those taxes? I mean, your expenses and what you can write off and expend and all that kind of thing.
Yeah.
So that's what I want to talk about.
Yeah. And so just on that note, though, because I just find this so fascinating because, COVID's hit everybody, including the IRS.
Yes, I know.
So with
incredible.
the 7.5 million that they are behind, they're projecting there is $1 billion with a B dollars owed to the taxpayers for refunds for the past years.
Oh my God. That's crazy. That is crazy.
Right? Just makes you really want to get busy on your own taxes.
I know.
What's the point?
You know, it's funny because we filed an extension the last 2 years.
Yeah.
And I got several notifications from the IRS asking for $17 more. We found that this number needed adjustment.
Yeah.
Could you please pay $17? And I'm like, honestly, I don't think they were right, but I'm like, $17,
Yeah,
here
sure,
you
there you
go,
go.
because it's better than, the alternative.
Yeah.
So they have enough time to find that. That's just so odd,
Oh, they've done some crazy things to me. I'm often under an extension, ask my CPAs, just because I can't seem to get my stuff together. But I remember I had a year where the IRS, they did the same thing. They sent me a refund, say for $200. And I was like, wow, money back. That's fantastic.
Yeah.
Put it in the bank. The next week I get a notice saying I owe $158. And I'm like, okay, well, I'm still ahead. But why'd you give me the $200 if I owe you one? Okay, whatever, write the check. Then they sent me another refund. It's like, I don't know what's happening over there.
I know.
But whatever. Like I said, when it's short money, you just move on. But and then so before we get into the things that you can write off as realtors, I just want to bring up this point because this woman also was talking about this, and I said, if you're under an extension, like many of us, you want to make sure that you still send in your estimates, what you think you're going to owe, if you're going to be owing. If you think you're going to get a refund, this doesn't apply to you. But if you think you're going to owe, get your estimates in anyways on time, because when they get to you later, because it could be a couple of years from now at the rate they're going, there's interest and penalties that accrue.
Yes.
So it's super important. If there's ever an important year, this is the one. Get your estimates in.
And the other thing just to think about is that if you overpay your estimates, they don't give it back. They apply it to the next year. So
you can get it back. Oh. You can get a choice. There's a little checkbox.
Oh.
Yep, and you can actually, because I've done that before, I'm like, I'm not applying it to next year. What if the government goes bankrupt? I'm like,
oh my God, my father so I'm like, I'm going to pay now because God knows how much money I'm going to have next year. Oh, yeah. This is why we're good partners, right? Yin and yang.
Yin and yang.
Oh my gosh.
But anyway, so those are just my little tidbits and takeaway that I got from this woman that I was listening today, and she seemed like she knew her stuff. So I just wanted to pass that along.
That's super cool.
Yeah. All right, so let's talk about things.
But before we do,
okay,
I want to give you a couple of resources while we're talking about this as well.
Yeah.
Just for you to take note of for resources. Okay. And the first was that I was Chris Bird, so as in B-I-R-D, Chris Bird. Now, there's many Chris Birds out there. One I think is a wrestler. One of them is a singer. But the Chris Bird, if you put in tax, this gentleman who used to work for the IRS, he's a speaker trainer for the realtor organization. Well, he's a realtor. I don't know if he actually ever practiced real estate, but he does tax training. And he is phenomenally successful and funny and informative. And I was on one of the webinars with him once when he was helping people figure out how to write off their boats. So, because they were talking about like the little summer places like the getaways they were buying during the pandemic and how they could get some expense money for that. And they're like, well, what about my boat that goes with it?
I hope my husband isn't watching this.
I know. So anyways, but his name is Chris Bird, and he's just incredibly informational. And I think he and this other gentleman, Dale somebody, wrote a book. Yeah. So get the book if you are a realtor, and you will not be sorry. I'm probably going to buy about 20 of them and give them away because he's just so good.
Yeah.
And so part of my information is from him today. The other thing is that Lee Brown, who's like another trainer, realtor phenom, she does a podcast called Crazy Shit in Real Estate. And she did this like news break kind of thing a couple of weeks ago, talking about one of the things I'm going to talk about, which was a way for realtors to get money from the family leave money and all that kind of thing during the pandemic. And she said, I can only talk for 5 minutes because I got to go home and amend my taxes, because she hadn't heard of it. And it's another way for compensation. And this is the first time, as far as pandemic money goes, or for us ever getting subsidies. Yeah. Like this is like really the first time realtors have ever been included in the loop. So it's pretty exciting.
Well, and it was interesting too, because they were talking today on the show I was listening, is if you didn't get some of that stimulus money, it's not like some of us were just like, oh, I guess I didn't qualify or whatever. If you didn't get it, it's not too late.
It's not. It is not too late, and that is part of my thing. So, anyways, let's start with yours. And I just want to preface you that I did a little homework too, and I have 112 things that you can write off.
Well, I hope you're all sitting down and comfortable, because apparently this could be a long episode.
But the bad news is my printer was not working, so you'll have to put it online, and I will give you a link to it. So anyway, go ahead, you start.
Well, let me go over my 8.
But hers are here, right? So credit and kudos to Patti. Hers are in front of her. Mine are in my iPad. Living a sad little life.
Well, I always put in some of the obvious ones. So like your cell phone bill, you cannot write off 100% of it, because you are not, it feels like you're talking about real estate 100% of the time, but it is not likely unless you have a phone that is designated just for real estate and you have a separate one for your personal calls, family calls. But if not, you're going to have to figure out a percentage. Obviously any of your dues or fees that are associated with your boards and your prescriptions, your subscriptions with like MLS.
Prescriptions should be covered. I'm sorry, that is part of the job. That's what made me this way.
Your Valium is not right off.
I'm not sure about that.
Okay, well, we'll talk to Mr. Bird. When you get things for your business, like a laptop. But again, that's probably going to be a percentage if you are not exclusively using it for your business. Any of your education and training, your ongoing trainings. Obviously, office supplies. Now, let me say this. Office supplies. Oftentimes you have, a receipt for $5 here, $20 here, and you're like, yeah. Oh my Lord, it adds up. Like, I just know in my own office, every time when I'm doing my taxes and I'm writing off like $7,000 of office supplies, I'm always like, is that right? Like,
yeah.
I didn't know I had that much paper, but it just adds up.
It sure does.
Any of the marketing you do, of course. Some of you who pay at other brokerages, you pay like desk fees or any of those types of fees, you can write all those off. And of course, any of your real estate software, or if you have a special CRM or anything that you pay for, you can write those things off. So that's my big 8. What you got, Kate?
No, those were good. Those were really good. So I want to start with a story. So when I started in real estate, so my first several years in, they weren't big years.
Yeah.
But I was somebody who, like, I invested in my business, and with the write-offs and the depreciation of the car, and all of the things that you are able to write off in real estate. And I had taken a class on this, probably like my first or second year, and I was actually at Jack Conway at the time, and I brought my book in, and everyone's like making copies of the pages of it so that they would know what they could do also. But I did not pay taxes for like the first 8 years that I was in real estate.
Because you wrote things off.
I wrote things off, and appropriately. Like, I'm a big believer in bootstrapping and reinvesting back in your business, and so I had a practice of that.
Right.
So all of those things that you said are really good, and some other of the items that kind of go around there that you're not thinking about is like your Audible subscription, and some of the fees that you pay on your apps, and those kinds of things are write-offable.
That's good.
So you can take that a little bit further. And your memberships on different kinds of programs. I don't know if you have any memberships. Oftentimes like your Amazon Prime, if you buy business with it, whatever. So there's a lot of other kinds of subscriptions. I am not going to do this. I think this is a wrong time for this to think, but we'll talk about that another day. So anyway, so you have those.
Yep.
A big thing that came out like in 2020 was that you buying a heavy, what they call a heavy vehicle, right? According to Chris Berg, that's how he says it. Heavy vehicle. That I think is like over 6,000 pounds, but under 25,000 pounds.
Okay.
Is you could depreciate it completely that year. Okay, so that is
what's a car that would be over 6,000?
Like like my car would be your any SUVs, generally SUVs, then up like through the suburban kind of family.
If I have a Yugo, forget it.
Yugo, just forget it. You saved on that price of that car, and that's going to be.
You're not writing anything off.
But you can write the whole thing off. So a lot of people invested in new cars during that time, and now they have changed it and modified it somewhat for if you bought a used car and stuff like that. So yes, it is. And now gas. So they always talk. So in this article that I'm going to give you the link to, they talk about the simple write-off and then the complicated write-off. Right? Simple write-off might be what you do for mileage. Mm-hmm. Same thing Patti said. Like if you are using your car to go to all of your showings and all of your houses and to whatever you're going to do, that's write-offable.
Yep.
If I am driving from my home to the office, that is not write-offable. Mm-hmm. Okay, so one of the things that I did back in my day when I was saving on taxes was I would always go check out my listings on my way into the office, right? So I would go and swing by, make sure the sign was clear. I would check it off. I would go and
that's a pro tip right there.
I know. And so like including on that you are stopping and you are like, so like my route would change depending on what I have for listings.
Yeah.
Again, I'm not going to go drive to New Bedford to check out a listing on my way to Mattapoisett, but you get the point. So there's ways of incorporating that drive time so that it would be effective.
I like it.
If you do not have a set desk at the office, like as opposed to those desk fees, you can write off a lot of the desk in your house and the part of your house that is used as an office.
Can I just, I want to make this point on that because sometimes people don't understand this, is if you write, and if there's any tax professionals and you think I have this wrong, but I've seen it a couple of times now. If you write off, let's just say you have a designated office, you write that off over the years and depreciate it. When you go to sell your house, there is going to be some capital gains on that portion of
because
your
that's
house.
Not your residence.
Because you're right. because you're now you've
point.
changed the designation.
I never ever knew that. So see, I have left here a smarter woman.
That's my pro tip.
Yes, there we go. Pro tips. So anyway, so vehicles. The complicated one had all your oil changes, all your this, all your that, and also they talked about various things about leasing or whatever you do. So there's a lot of information out there about our vehicle expense. So I thought that was really cool. The other part about that was another big write-off. Well, meals are 100% write-offable again, right? So as long as they're business, you talk about business or whatever. So for a long time they had cut that down to 50%. But during the pandemic, when restaurants weren't open and they were trying to stimulate the restaurant part, they went back to writing it off for 100%. And
Kate and I going out for dinner.
Yes. Now gifts, believe it or not, are only $25. So I go overboard on those gifts. And one of the things I try to do, if that's the case, that I'm going over, and I sense that I'm going to be going over, I somehow get a permanent logo on those things, and it becomes a marketing expense. So, for example,
pro tip number 3.
So, for example, if I like the Cutco knives, they always said that those are write-offable. The cutting boards, the pictures that you have, put a logo on there, put your contact info on there on some part, and everything is write-offable in that way because it's marketing.
That is hot stuff right there.
That's why I'm an orange.
I know. I can feel it.
Oh my gosh! So a lot of the time, like when you're doing that, I mean, like, because most of the time, you know me, like, I will never give a bottle of wine for like a gift. I'm like, once I drink that, they're going to forget about me again. Yeah. And so I will always do something that will stay around that house. And in my house, it's so funny. I got a new Cutco knife from Shannon Joyce, new Cutco woman in the area. She gave me one with my family's name on it. And so now, and I pulled it out like a couple of weeks ago. She gave it to me at Christmas time, but I was thinking of regifting it, but I didn't. But they're like, where's my Black McGregor family knife? And now they're all like proud about this knife. So it's like, don't underestimate like how these things can really matter. I just gave some customized glasses, and I gave signs, right? That my niece made, the really big signs, and had them branded. So that can all be considered marketing. So if you're going to go over that $25, see if there's a way that you can legitimately put it into another expense.
Love it. I think that is so awesome. And can we just take a sidebar for a minute? What are these Cutco knives?
Are you kidding me? You do not know what Cutco knives are?
No.
All right. So first of all, they're fabulous knives that will cut forever. They even cut through a penny, right?
We should do a demonstration.
My favorite things they have is scissors. And I just got hooked on the scissors, because you can take them apart and wash them in the dishwasher. Yeah. And so like all of that stuff, like if you cut chicken or something, it's not left in there. Yeah. So I will have Shanna come in and actually I'm so funny you mentioned that. I said she could come talk to us once we started getting back in the office. Yeah. So Shannon Joyce, if you're hearing this, I hope you are. We are. I want to know. We are gunning for you. So yes, Cutco program. It's just they're amazing stuff, right?
And you can have them branded.
Yeah, for free, engraved. What? Yes, and I had my logo on it and everything. Make it a bouquet and la la la. Here I am. I'm so cool. Chop chop. Anyway,
Cutco, here we come.
I know it is cool, and you can go on a payment plan, right? So it could be part of your marketing expense every month. So it's not like you have to, those. I get the great big water bottles before Yeti came around and all that kind of stuff. So, anyways.
Good stuff.
We are off topic. So
we're back in. All right.
I always bring it back to marketing, don't I?
Okay.
All right. Some things that are, what else do I want to talk about with this? I'm going to just stay with your list for now. I am going to give you the link to the ones, the 100 and whatevers. They just divide it up a lot more, and they give you a lot of interesting things. The things that are not write-offable and cannot show up as your expenses is any of your, what they call hygiene, right? So your haircuts, your nails, your clothing. They like, if you can wear it to church, then it's not work clothes. If you get it logoed, like we have, then you can write it off, right? So if you have anything with a logo on it or whatever, that's considered marketing.
It's not cheap looking this good,
I know it's not cheap looking this good, and I swear to you, I would never get my nails done if it they're not done now, but I would never get them done if it wasn't for real estate.
What if I put the logo on my nail?
I think it would be marketing. And there we go. You wonder why Patti has her logo on her nail, and it goes be bold. So anyways, all of those things will cannot be covered. So that is, and I know that's a big expense for a lot of people. That should not go on your returns. And the other one that kind of stuck out to me that was not write-offable was, let me see what's on here. I don't have my glasses though. All right, meals 100%, heavy vehicles. anyways, I guess let's just stick with that. Now I want to go on to my really exciting thing that I learned. And I only learned enough to be a little bit dangerous. Okay, and again, as I said, I was driving.
And I don't know where this is going. I told Kate, there's always a point in the show where I don't know where she's going. So when I do this.
Oh, yes, I know. That's her fear speaking, okay? Yeah. So you thought she was fearless. It's not true. She fears less, but she fears me. Okay, she fears my mouth. Yeah. All right, so anyways, I heard Lee Brown had this special podcast, her Crazy Shit in Real Estate podcast, and she said that there's this IRS form, 7202, which was going to save her, I want to say, in the upwards of like $30,000. And she went and she told the difference between a credit and a deduction, which again, I cannot speak to, but this is the good one, right? And what 7202 is, and then I went back, and so I wanted to find out exactly what it was for our little conversation. So I went and I went on YouTube, and I went in Chris Bird Real Estate, and up came a bunch of videos. And he's been a mastermind for us at CRS several times. So he has a couple of really good things, good information in there. But this he has he's been doing some tax tips, like 2-minute tax tips. So this 202 is actually from the Family Medical Leave Act. And what it essentially says is, and this is where Lee Brown came up with like her $30,000, was that if you, number one, cannot work because you had COVID, or you had to stay and help somebody who had COVID, like somebody in your family, so you stayed away from working, like, I stayed away from working for quite a bit. And the third was if your doctor said that you should not work because of the risk of COVID, all of those things, you get paid a daily stipend. And so they take it from the time of whenever it was into the time that, whatever the time was, and you get paid that daily amount. That's a tax credit, which is the good one, okay? And so that...
Can I just stop you really quick? So is this something you had to apply for at that time?
No, this is what I'm telling you. That's why Lee Brown was on her way home to amend her taxes.
Yeah.
Because she said, I did not put in for these things, and there were certainly days that I was stuck at home. Mm-hmm. And so, and they take it, I think, off of your income. So like if you are used to making $200,000 a year, like that piece of that credit comes from your $200,000. I'm using Lee Brown's numbers, which is probably like not mine, right? So anyways, so it's something to look at. It's the credit is 7202. You can file it this year for your 2021 taxes. It went until, I want to say, the end of September. Like, so from October, November, December, you're on your own. But I think, I'm not sure. But now listen, I told her I had difficulty doing this, and she's trying to read it, and she probably can't because it's a mess.
Well, then I just wonder.
Yep.
Is there somewhere, like, you have to supply some kind of proof of your sick days?
I don't know. I do not know. I do not know that.
Okay.
The other part about this is that there was so the loans that they gave out during that time, mm-hmm. They were saying, tell your accountant about it, but a lot of times those don't make it into your income.
Mm. So, yeah, there was a lot of back and forth in that when those came out.
Yes.
Was it income? Was it not
payroll
income?
Protection. Now, most of the agents, almost every agent qualified for some pandemic unemployment assistance.
Yeah.
And so, that piece right there, again, I do think that, as you said, like if you went back and you said, hey, wait a minute, all these weeks I should have gotten paid, mm-hmm. I think you can go back and amend it. So, yeah, so that's where some of the money, that billions of dollars, is probably going. So there's a lot of things you can do with your taxes. So if you are working with a tax professional and you are a realtor or a real estate professional, ask them about 7202. And that will be something that I think for everybody, I think for everybody, there's a way for you to tap into that, and that would be a tax credit.
And just be smart about it. Like, people often, talk about when people don't pay as many taxes as other people. It's because they know the code. Right. So don't be afraid to use it's the law. The code is the law.
Yes,
so
exactly.
Use it to your benefit and write your expenses off, and to bring your tax liability down, and therefore there's more money in your pocket, your family's pocket, or whatever. So
right. And
anyways, we're getting a low battery notification.
Well, I think that's a spiritual nudge to end this. Thank you guys, and we will try our best to be back on Wednesday nights at 5 p.m. Sometimes it gets something comes up in the way. Let us know that you want us here, and we will make sure that.
Or if you think there's a better time, like, we're still trying to figure out what the
we're
best
trying to
time
figure out
is.
our magic time.
Yeah.
right?
What's a sweet spot?
What's your sweet spot? All right.
Okay.
So, anyways, thanks so much, friends. We really appreciate you being here, and I hope that you got one little nugget. I bet it's one of Patty's nuggets.
No, it's a Kate nugget. That's why she's wearing orange.
That's
she's
right.
hot. Ah!
I know. See you guys. Bye.